In this video, I want to tell you about a very important financial figure, right? And his name is Gregory Mannarino. He stylizes himself as the Robin Hood of Wall Street. In the same way I'm very honest with you about the career environment and finance industry, he's very honest with you about finance, investing, and things like that. He has 260,000 subscribers. He increased that dramatically over the course of a few years. I remember in 2020, he was around 100K, I think, and he went from 100K to 260K quite quickly. He does daily videos covering the financial markets. He's very honest, as I say. He's not trying to manipulate you. He's not part of the mainstream media. He's kind of been cancelled by the mainstream media. I think he appeared very briefly many years ago on one of those mainstream media MSNBC type of websites. And then he didn't fit with the narrative. He didn't fit with the central banking cartel, and they kind of kept him out of that. He's worked at Bear Stearns. He's worked in the medical industry too, so he's quite familiar with, how these big industries work, as I mentioned, based on my experience too. So Gregory Mannarino is a great kind of contact and just a great kind of source of information. And just to give you a bit of context of how accurate he is, of course, nothing I say or he says is financial advice, but he's very clued in on how the banking system works and the reality of it, not the politically correct version of, managing assets, debt, the currency, the global economy, politics, and how that impacts trading and things like that. And as you can see, he's getting quite high views. You can see, 20 to 50K views every day. And then also, just to add to that, he's very accurate on things, and what he'll do, he'll drop loads of hints about what the rumors are in the financial industry. Of course, not insider trading, but it's good to know what's going on behind the scenes. So, for example, in August 2020, he was very adamant that Biden was going to win the election because Wall Street wanted him to win the election. He didn't support Biden, but he was just saying, well, Wall Street really want him to win, so by any means, Biden is going to win the 2020 election. And he kept saying it in a kind of a vague way. And we saw what happened in the 2020 election. We can't even discuss it on this platform. But, Biden won by any means necessary, right? Because Wall Street wanted him to win. Also, several months before the Ukraine war, he was talking about how it could be a good idea to invest in commodities. And there are various other factors why you might want to invest in commodities, energy companies, commodity ETFs, and so on. But I get the impression, from listening to him, does have a lot of insider contacts around hedge funds and things like that, and rumors do go around. Like if there's going to be a war or a conflict in certain parts of the world, whether it's the Eastern Europe thing, which I won't go into here, or the Middle East, they do tend to know. Wall Street tends to know where's the money moving, what could be potentially happening if there's rumors about mobilizing armies, things like that. So it's a good source of information to know what could be coming up. And I try to be very honest with you. He tries to be very honest with you, and I try not to be too negative or positive, and I think he tries his best to do the same. But obviously the world is in a very dysfunctional state right now, where we're trying to be as positive and productive as possible, and I think he does the same while being quite honest with how bad situations are getting in the economy and in the world, period. Now, Gregory Mannarino has actually written a book. It's a rare cult classic book on finance and investing. It's only about $10 to $15. It doesn't cost much money. I don't think it will really, draw your budget out by any aspects. And it gives you some good, sustainable basics on understanding investing and understanding how the markets are kind of rigged against you. And that's a very interesting thing to look into. And in this video, I'm going to talk you through some key investing, trading secrets that he will share with us. It's called A Not So Random Walk on Wall Street. So there you go, if you want to find the book. Sometimes it's out for sale, sometimes it's a bit difficult to find, but I'm sure you'll find it out there. So the first point about the book is that the price action of the overall market or asset is not random. So sometimes you see the price of something going up or down. It's not clear why. It's not random, right? People are buying and selling assets. Sometimes it doesn't make sense because there are a lot of information that is technically should be considered inside information on the basis of which people trade. There could be major banks who have access to information you don't have. So if you see the price of something decrease randomly and you don't know why, that's probably because behind the scenes in the banking system, in the political system, there's a level of manipulation going on. You could have central banks manipulating the price of a particular asset, buying and selling it. There are many banks that have a bad reputation. JP Morgan manipulating, short selling the price of silver. JP Morgan pushing down the price of silver. HSBC getting involved in FX price rigging the prices of currencies. So all types of dodgy behaviors do go on. So just bear in mind, if you see the price of something moving, there is a reason for it. It's not just simply a random instance. Now, what he does in this section of the book is go through each particular sector and explain it in detail so you understand what each sectors are and which ETF is represented by that sector. Now, before I do that, the whole concept here is ETFs. If you're not aware, ETFs are essentially a fund that represents a particular part of the market. You can have an ETF that represents the entire stock market, like the SPDR, a ETF that represents the S&P 500, or you can have an ETF that represents the energy sector or the materials sector, the industrial sector, utilities, healthcare, financial sector, and so on. So what he points out here is firstly, which ETFs, this is really making investing really easy for you, of course not a financial advice, but he goes through each and says, okay, well, XLE is the ETF for the energy sector. Then you have XLB for the materials sector, then XLI for the industrial sector, right? So the whole point here is then okay, so these are the different sectors and how I can invest in each of the sectors, rather than focus on individual stocks and analyzing the entire balance sheet and annual report of Tesla or a particular specific company. You know roughly how the economy works in the sense that each industry sector and how to analyze the price movements there for each sector. Then the way this works for you and how it helps you as a personal finance investor is to look through sector rotation. And what that means is the really most simple way of investing, because you analyze where is the market right now, and that can be a bit of a debate of whether the market's at the bottom, whether it's recovering, whether it's going to crash. So that's where you have to kind of do a bit of analysis and make a decent judgment. And then what you do is you can invest in various of these ETFs, various of these market sectors on the basis of where the market is. So if the market is near the bottom and you're in a recession, it's a good idea to buy finance, tech, and cyclicals because they are at a low price. Typically when the market's in a recession, tech companies do layoffs, tech companies are saving money, they experience losses because the tech industry isn't growing. Tech tends to do well during a market top, and that's when you might want to sell those because it's doing quite well. Then when it comes to the market crashing, when it comes to the market doing well, you might want to look into basic materials, energy, and so on. So it depends on where the market is and what you want to invest in. And that's how you can invest through sector rotation. So that's something you can look into in terms of investing in ETFs. So again, he goes through all the different sectors just so you can understand this is how it could impact it. So for example, the healthcare sector, when you have clinical trials that do well, that could boost that sector. So if that was coming up, that's good to look into. And another point here is, say you work in one of these sectors, and let's pick something that isn't finance. So say you work in tech. Now, if you work in tech, you could really focus on understanding how to invest in that sector because you have some detailed market knowledge from being someone who works there, but you could also study the market in general and be like, okay, cool. Well, for example, say you work at Microsoft, you understand how Microsoft works, but you know how Google and the general industry is. You hear the rumors about layoffs coming up or a new industry innovation in AI or tech, things like that. Then what you could do is invest, and you could really focus on how to invest in that sector. And then out of your interest, maybe you're interested in IT because you work there, but then also you are interested in the energy sector. Lots of talk about ESG and energy supply, sustainable energy. So say you research that in your free time. Then if you focus on investing and buying and selling those at the right time, that is a great kind of combination because at least you've really studied them quite well. And you're, as much as you can be, an expert on those areas. That's how you can become a good investor, by kind of focusing on the general overview performance of the S&P and then specific sectors. So there you go. That's a good start. Next thing would be to look at the market cycles, right? So the market cycles, they do vary between the different time frames. As you can see, there's a time when the market's a good time to accumulate. So you'd accumulate assets when the market is priced low. So say the price of gold is dropping and the price of gold is low. No one's investing in gold, but long term it's a good investment. Then you might want to buy some gold, right? That's the best time to buy, when the price is low, not when there's a lot of hype around it. So then you have the markup phase where the price is increasing, the distribution phase and things like that. You might want to sell when the market's particularly hot. and everyone else is buying. So you just got to be aware of the trends and kind of be ahead of the curve when it comes to how other people are trading. So that's worthwhile looking into. Then what I find is really useful here is he looks into the general market performance by sector, right? In terms of month by month. So this is good. So he mentions in January how the market performs in January reflects how it probably perform over the year. This is based on, decades of analyzing markets. When it comes to March, things tend to be volatile and the market will perform well in mid-month. So the whole point is he goes through each specific month, and in detail, he goes through how the market performs then. Now, I'm not saying, again, no financial advice here, but I'm not saying you can follow this exactly, but at least you know the general trends. If you know, the markets typically perform well in December, then that historically, then okay, if the price of an asset you have is going up, well, that's typically how it would perform in December. It's not necessarily because something radically changed in that particular market in December that changed the price. So just be aware of general trends. You can't predict the future, but if you're aware of general trends, that's really how you end up performing quite well in terms of your investments. Now, here's a good sign of a good finance book where they're open and honest with you that you're not dealing with a legitimate market. Here we have JP Morgan, who got involved in manipulating the price of metals, of gold and silver. And what is the reason why it's a good sign is it shows you he's being open and honest with you. Deutsche Bank also did something similar. He's not pretending that you're trading these perfect, efficient markets that are trading at prices that are completely based on supply and demand. No, there is a lot of manipulation at the back end, and that explains why there is such weird price movements. Sometimes there's a conflict in the Middle East and the price of oil stays the same. How does that work? Because typically, if there is a conflict in the Middle East, the price of oil would go up. So the price of oil is not going up. That means the American central bank or something behind the scenes is deliberately suppressing the price of oil. So you could do the same with any other type of asset, right? Why is a particular currency that is going down dramatically, all of a sudden it spikes up? Sometimes it could be genuine supply and demand, but a lot of times it could be the central bank manipulating the price of their own currency. Now, an important point here is trade the market you have. And he put it in big font, right? Unlike anything else in the book. The point is people love to think, oh, I wish I could live in the past and buy this asset when it was a lower price. I wish the price of things weren't manipulated. I wish we were in the boom phase and not the recession. You got to trade the market you have. One thing you run out of more than money is time, right? So if the market's going a particular way, you might want to trade rather than wait for this mythical future. You see a lot of people do this when it comes to property investing. Oh, one day the property price is going to drop, then I'll buy like 5 properties. It's like, think realistically about your time in your life. You don't really want to have your time obsessed by finance or obsessed by this dream reality when you're going to buy something when you might not. So look at where you are today, where the market is today, and trade on the basis of today or this week or this month rather than get caught up in hypothetical futures. Now here he has some general trading tips, right? He mentions here, when you enter a trade, you should be aware of when you want to sell and pull profits. And another key lesson he mentions on his YouTube quite often is that, never be afraid to pull profits, right? You shouldn't be like, oh, I made 5% profit, maybe I should wait for 10%. It's up to you. But the one thing you don't want to do is just wait too long and then the price dips and then you lose the profit that you could have made. So always be aware of, trying to maximize your profit, but also don't be afraid of selling and capitalizing on that profit rather than waiting for this mythical future where it could reach a high level that might not come. Nothing wrong with pulling profits. As he says, pulling profits is the number one goal of any trader. And if you get into a good rhythm, and there is something to be said about trading where if you're in a good rhythm, you kind of got a good sense of what's going on in the market. You're kind of operating at a good pace. So you kind of avoid any major losses. So that's a good thing to consider. So another key general tip is the trend is your friend, right? And what do I mean by that? When you have a trend in the marketplace, you want to, as best as you can, kind of follow the trend and be on the long or short side of the market. You want to essentially be following the trend and be 1 step to 5 steps ahead of the trend. You don't want to be too late because then people will be selling when you're buying at a high price. So follow the trend of the market and try and make that work for you. We didn't go through every single detail of the book. It's about 70 pages long. It's about $10, $15. It is worth it. I'd highly recommend it. This system that we operate under, and there's a reason why he calls himself the Robin Hood of Wall Street. The system we operate under wants to exploit you in all types of ways, not just your finances, not your wealth, your health, and everything else, right? So that's why you need to be one step ahead of things and take control. The same way you might take control of your health and your nutrition and things like that, you should take control of your finances in the same sense by improving your financial literacy and making small financial investments that you're comfortable with until you can make a profit and develop your knowledge the same way you develop your skills and knowledge in your career. So I hope you found that helpful. Brief overview of Gregory Mannarino, following market trends, developing that type of knowledge to become a successful investor on your own behalf. If you want to discuss more about managing your personal finances, managing your career, working towards financial freedom, I have a career coaching service. There is a link in the description. I'll be happy to talk with you directly. So feel free to reach out to me. Thanks for listening. There's 2 recommended videos on your screen right now. Let me know what you think about Gregory Mannarino in the comments, and I'll see you next time.